Well, I think we're going to be at the point where it's going to be the messaging coming out of the Fed. Again, the market's pricing in 25 basis points. There was some discussion that you might get 50. There's a little bit of be careful what you wish for here, because with a steeper Fed rate cut would probably come an implication that they're more concerned about economic activity. So really what's going to be important as we go into next week's presumed 25 basis point reduction is some underlying conviction or confidence by the Fed that, again, we are, for the most part, threading this economic needle, that underlying economic conditions is in pretty solid shape. We've sort of slayed the inflation concern of the past couple of years. And what that does, it perpetuates the investor confidence that we see manifested in an S&P at 5,600.
So it sounds like, obviously, 5,600. So you're saying the 2024 highs are already in. Do you think the lows of the year are in? And is there anything that can move your forecast to the upside later this year?
Right. So as part of our projections, we're using a 6,000 bull scenario for the S&P. And what that really requires is a more aggressive continuation of this Goldilocks scenario, where you do get this broadening action, where you see other sectors of the market that have a more early cycle or economic sensitive dynamic to them begin to kick in. Okay. So that would be the path for the index mathematically to work higher. And again, at the crux of all of this is, what do you do with that Mag 7 mega cap growth cohort that, is 30% of the index? And here, our argument from a barbelling perspective is that we want to be owners of that. The growth setup into 2025 is pretty visible and pretty compelling, right? But at the same time, what we're noting in the data is that the degree of upside to estimates as time has been passing over the past 12 months has been lessening. So the setup from our perch is essentially you get a continuation of the mega cap growth cohort influencing the price action, but the path higher is a broadening out to a more traditional early cycle economic sensitive bias as we go into 2025. And again, I think that's sort of the bull case, but we have to allow in here that at 23 times earnings, the S&P is fairly aggressively valued already. We think there's some modest room in our 2024 estimates to work higher, but not materially so. So all in, we think we're right around a fair value level for what we know about the economic and monetary conditions right now.